afternoon. Happy Friday. Welcome to Capital Account. I'm Lauren Lister here in Washington, D.C. Now, while the euro continues its downward spiral that we've seen since mid-October, Europe's technocrats and other leaders are talking about how debt-stricken countries can stay in the euro. And we know MERKEL will come together for a meeting on Monday.
Madame Merkel, dieselbe Prozedur wie letzten Monat?
Dasselbe wie immer, du Flitzpiepe, aber hopp, hopp.
That, of course, is the fake German viral version. Lucky for you, we have a German economist to translate. But we'll find out from him how countries could get out of the euro. And in the U.S., of course, new unemployment numbers are out, being touted as good news. Happy Friday.
So we're making progress. We're moving in the right direction. And one of the reasons for this is the tax cut.
Not so fast. We'll show you why the so-called improvement may not be the Hail Mary touchdown for the ailing economy that people are hoping for. And it's Friday, which means from gold to guns and ammo, we'll respond to you, our viewers. Let's get to today's Capital Account. So again, today we saw the euro hit another close to 16-month low against the dollar. We saw that yesterday too. Also, German factory orders plunged to an almost 3-year low. That was news out today that showed that. Plenty more bad news for the eurozone. I could rattle off plenty of it. Despite that, politicians are just continuing to try to hold it together. Technocrats meeting. Today, Monti met with Nicolas Sarkozy. The Guardian's Rome correspondent says Monti's aim is to drive a wedge into the Merkel alliance. This is, of course, before Monday, when Merkel and Sarkozy are supposed to meet in Berlin to continue trying to get a grip on the debt crisis. But what about getting out of the euro? Well, you may remember European MEP Nigel Farage, who was on our show, telling us that an exit plan was needed.
I've been urging the bosses in Europe for the last year and more, please can we have a plan B? Please can we have a contingency plan? Now, you know, we've started some work on this. We held a conference here a month ago with a couple of senior German economists putting forward ideas as to how we can help Greece, Portugal and other countries get back to their own currencies. There's been a big problem.
Now, one of those German economists is with us now, one of the keynote speakers at the EFD Group's conference that was organized by Nigel Farage, which he was just talking about, called Preparing for Euro Breakup. He is Philip Bagus, professor and author of Tragedy of the Euro, which you see there. And he is coming to us all the way from Spain, the heart of some high unemployment and, of course, a housing crisis. One of the major problems for that country. Thank you for being on the show. I'll get straight to this because you have an interesting perspective. Unlike many of the people we interview who think that the euro needs to be here to stay, you have a plan perhaps for getting out of the euro. But do you not think that the euro is worth saving?
No, the euro is not worth saving. It's a misconstruction. It has provoked this sovereign debt crisis, and this is no coincidence. It's, as I argue in my book, it's a tragedy of the commons. That is, several governments can finance their deficits via one central banking system, and thereby externalize the cost of the deficits on other nations. So there's a run to run ever higher deficits, leading to inflation.
Now, your book, I think, as you just said, is The Tragedy of the Euro. We teased it. You said you originally wanted to call it The Case Against the Euro. So I'm going to go out on a limb here and say that I bet you're not exactly a big proponent of the Euro project in general. Why not, if that is the case?
Well, because it's, as I said, it's a misconstruction. The tragedy of the commons is you have a commonly owned resource that can be exploited by several users. Traditional example are fishes in the oceans. Everyone can fish them, so there's overfishing. Why? Because if I don't fish, the other will fish. So it's over exploitation. The same happens with the euro. Several governments can finance their deficits with one central banking system. The resource that they are exploiting is the purchasing power of the euro. That is, when, an example, Greece has a deficit. What does Greece do? It prints paper and names it government bonds. Then the banking system buys these bonds, pledges it as collateral at the ECB, and receives new reserves. And with these reserves, the banks can expand credit, the money supply increases, and prices rise. But not only in Greece, but also in Germany, in Austria, in France. So not only Greeks are paying for the deficit of their government via price inflation, but also foreigners, Germans or French or Spaniards that are using the euro. So then you have the incentive to live on behalf of others through deficits. And in fact, you can only profit from this monetary redistribution if you have a higher deficit than other countries. For example, if Germany has a deficit of 3% and the rest of the Eurozone has a deficit of 10% of GDP, this is all monetized, and then prices rise 8%.
Okay.
In the Eurozone, then you are losing.
So then let me ask you this. I didn't mean to step on your toes there. Is there any scenario where you would support a euro system, or are you against the entire notion of a common monetary policy, even if there is linked budgets?
Well, you could solve the problem if, for example, you forbid the ECB to accept government bonds as collateral, and if you forbid the ECB to buy government bonds, and if you forbid governments to bail out other governments, then you have no problems that deficits are monetized. And then the governments just go bankrupt, and that's it.
Okay, so bankruptcy, not bailouts. So let's talk about, speaking of bankruptcies and defaults, let's talk about a breakup plan for the euro, because we haven't really heard one yet on this show, though we've heard a lot of discussion about the problem of the euro. Before we get to that, though, a lot of people say that an exit from the euro, a breakup, would be devastating economically. How do you argue against them?
Well, what is now happening is devastating. But it's less hidden. The ECB has buying government bonds. It has been monetizing. The interest rates are artificially low. They are malinvestments. They are maintaining government spending that is poor waste. And we are going to centralization, maybe a European superstate. I mean, this is a disaster. Of course, if there's a euro exit, there will be defaults, but only for people that gave money to irresponsible governments.
So for investors, investors would have the pain. Now, Nigel Farage, you took part in what he organized, and he said that there is a $250,000 prize for someone who comes up with the best solution for exiting the euro. So what is your plan that could vie for that prize?
Well, I actually propose several options that go ever further in the right direction. One would be just to return to national currencies. You can do this easily. You just, by surprise, you introduce it, and then afterwards you can do a referendum on it if you want to stay on the new national currency or not. Another option would be to introduce a parallel currency that is besides the euro. So your central bank exits the euro system and uses its assets to back a new national currency. And the third option is just currency freedom, that anyone can issue its own currency and there's a competition. What is important in these reforms is that they are accompanied by measures to alleviate the turmoil in markets that there will be, that there will be anyway. So in the euro, the crisis of the euro is also because the state in Europe has grown to such an extent that it threatens the stability of the currency. So to make the exit less harmful, less severe, what you have to do is to reduce the size of the state. You have to privatize, you have to reduce the deficits, you have to flexibilize labor markets.
Okay.
Only then the exit will be a success.
So
For
maybe,
example, if Greece...
So maybe let's put this into terms that are a little bit more specific. Let's take kind of the best candidate for an exit from the euro, some would argue Greece. What would you tell their central bank about how to get back to the drachma?
Well, as I said, the best would be probably to just close the central bank and then declare currency competition. But what they could...
So close the central bank and have competing currencies?
Yes, 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 that would be the best.
So who comes up with the currencies?
Well, a company, you open your company and you issue, you print gold coins or issue notes that are backed 100% by golds and bank accounts. And you could compete with others that issue silver or other currencies.
So private currencies would compete with each other to become the currency, no central bank. Really interesting. I want to keep you on. We have to go to break, but I'm dying to talk to you about Germany because you're a German economist. You're sitting in Spain. We got to talk to you about both. We'll be right back after break. We'll have more with author and professor Philip Baggis. And still ahead here on Capital Account. So just how can a country get out of the euro? We'll be talking about it. We want to know what Germans think. We'll talk to German economist Philip Baggis about it after the break. First, your closing market numbers.
We just put a picture of me when I was like 9 years old on To Tell the Truth.
I have a confession. I am a total ghetto princess. I love rap and hip-hop music and Christian music.
I thought he was kind of a dick yesterday.
I'm very proud of the role that Al Jazeera has played.
You know how sometimes you see a story and it seems so whole and complete, you think you understand it, and then you glimpse something else. You hear or see some other part of it and realize everything you thought you knew, you don't know? I'm Tom Hartman. Welcome to The Big Picture.
What drives the world?
The fear-mongering used by politicians.
Who makes decisions?
Considerable breakthrough has already been made.
Who can you trust?
No one who is imbued with a global missionary zeal.
Where are we heading?
State-controlled capitalism is called fascism.
When nobody dares to ask, we do. RT, question more.
All right, we're back. We're hearing about how to get out of the euro, and we're going to find out what German sentiment is, because we hear so much about Germany. They are the heavy hitter in Europe, and Philip Baggis, professor and author, is a German economist. So I'm going to bring you back into the conversation because I really want to talk about the sentiment with Germans. They're against ECB money printing. Do you think they're going to get fed up and say, to hell with this, we want the Deutschmark back, or do you think that they're going to want to stick in the euro?
Well, Germans are good citizens and obey to their government. So they haven't protested very much because they don't feel the pain really that they're going to suffer. But once price inflation will pick up, maybe the pressure from the population will be so strong that yes, Germany exits the euro.
But as far as sentiment with Germans, it sounds like you're saying that they're not that concerned about this Eurozone crisis, that they're fine to stay in the euro?
Yes, yes.
Interesting.
Germans are against the euro. The majority probably would like to have the Deutschmark back. However, the German establishment politicians have supported the euro project, and which is very connected to the project of a European super state. So, Germany has bailed out Greece with other countries, Portugal, Ireland. They have instituted a big bailout fund. They have allowed the ECB to buy government bonds. So they have already done almost everything. It's really strange that it has gone so far. So that shows you that there's no strong resistance, at least no resistance that is canalized through a political party.
And as I said, you're a German economist, but you are in Spain yourself, where, of course, unemployment is incredibly high. A housing bubble is deflating. It's the fourth largest economy in Europe. We hear a lot more in the news about Italy. Do you think more attention should be paid to Spain?
Well, Italy is more in the news because their government debts are much higher than Spain's. So Spain has more time, so to speak, than Italy. But yes, Spain could be more in the news because it's also in a very dangerous situation, because we have here almost 5 million unemployed, and this is not sustainable in the long run for the government, for the public finances.
Going further and further to that path where you see disintegration as being an option. So I'm wondering, what about the argument that this will create political disunions if the disintegration is what happens? It could lead to a return of realpolitik. Take Greece, for example. Its membership in the euro has offered it a level of diplomatic protection from Turkey. So what's the risk that a new Europe would bring back old divisions?
Well, I don't think it's really a risk. It's also a chance for another Europe. We have here two options. We can go to a socialist Europe with the European super state, or we can go to a free trade zone. I think the European super state will actually provoke more conflicts, because there will be redistribution, and when there is redistribution, there are conflicts. There's a latent conflict there. Only free trade generates harmony and peace, and this is a great chance of this situation to go back to a more free trade zone.
Okay, so you see free trade, no euro. Do you think you're going to win that $250,000 prize?
Well, it depends who decides, who will decide who's winning the prize. If bankers or politicians will decide, probably not.
Yeah, probably not, but we'll remain to, we'll have to wait and see what happens with Nigel Farage's prize. We appreciate you coming on the show and giving us a solution to exiting the euro, because we hadn't heard one yet. That was, again, Philippe Bagus, author, economist, joining us from Spain. All right, U.S. unemployment numbers came out today for December, showing the rate edged down to 8.5%. Everyone's excited. Mainstream media headlines are cheering the news. Here's one to give you an example. USA Today says December unemployment rate lowest in nearly 3 years. This headline I saw a lot of other places too. Of course, U.S. President Barack Obama is excited too.
So we're making progress. We're moving in the right direction. And one of the reasons for this is the tax cut.
All right, progress, moving in the right direction. So should you be excited? Okay, sorry to point out the obvious, but we all know those numbers are BS, especially if you're watching this show. But let me break it down for you. Okay, this chart comes to us from our friend Carl Denninger at the Market Ticker, showing the employment rate. He points out that the employment rate dipped down a little bit, if you can see this, and that more or less it has flatlined. now for the last 2 years. Now, also, I want to point out that the total number of people employed also went down. So that should make you scratch your head if the number of people employed are going down. And how about the jobs that were added? Okay, reportedly 200,000 according to the BLS. Well, Zero Hedge posted this from Morgan Stanley's David Greenlaw, pointing out that some of the strength in this report should be discounted because of a seasonal quirk in the courier category of payrolls. Okay, this is FedEx, UPS, those kind of workers. Jobs in this sector jumped 42,000 in December, repeating a pattern seen in 2009 and 2010. We should see a payback in next month's report. Okay, so minus those jobs, things were about where economists were expecting. Also, retailers added more positions than expected, which again, could turn out to be seasonal. Okay, this was for December. We talked a lot on this show about the seasonal hiring. And reportedly, even if the economy did add 200,000 jobs per month, we wouldn't get to pre-recession unemployment until 2019. Okay, by then I'll be pushing 40. On the bright side, back to the couriers. Maybe it means, hey, let's roll the video, if we have it, of this guy. Maybe it means that someone like that, ooh, yikes, won't be delivering your breakable glass to your backyard again. On the downside, this house, if we could bring it up, will remain a pipe dream for most. I think we have a picture of it. Katharine Hepburn's old house. It's on the market for $28 million. You may not be able to buy that, but it is rumored in the Connecticut Post that President Obama may be considering buying it. That should be food for thought, and I hope that now we've given you thorough reason not to cheer about those unemployment numbers. It's Friday, which means it's time for viewer feedback. And this week, one of our guests, we interviewed James Turk. He's founder of Gold Money. And this sparked a conversation about gold, the Fed, and hyperinflation on the web. First, here's Turk on hyperinflation.
And this is actually the point that I've been making for some time, that we're on the road to hyperinflation because what we're doing is turning government paper into currency. And
Okay, so he thinks hyperinflation is a scenario we can see, and Dick3Tennis writes on YouTube that compound interest is the most powerful force in the universe, quoting Einstein. The U.S. has to pay interest on the debt, and when the amount of payable interest on the debt is at a level that it consumes all tax income, then that's the point when even a country like the U.S. can go into hyperinflation. We are not far from that. Okay, so that is his view, that we're not far from that moment. We guess that could lead to hyperinflation if you have to print out more and more money to monetize existing interest payments. Then again, you could just default, which would be deflationary. We'll have to see what the U.S. actually does. But for anyone curious, the interest on the U.S. debt in 2011, according to the U.S. Treasury, was a staggering $454 billion. Okay, and with all the talk of money printing that we had, this had Coffee writing to us. I just don't see how dismantling the game that the Federal Reserve is playing is even possible at this point. And you know what? It's a great point. How do you put the genie back into the bottle? It's actually a question that I posed to James Turk. Some would argue the economy is going to have to go over a cliff first and take fiat currency with us. And this leads us to how to protect yourself. And Turk was talking about gold. And viewer UB Mad LOL says, sell everything and own gold? F that. I started to stock up on plenty of food and ammunition since last year. Well, viewer, it turns out you are not alone, my friend. It looks like more people were at least looking at buying guns last year. According to the FBI, it performed a record number of instant background checks in 2011. These are for could-be, would-be firearm buyers. 16.5 million, up 15% from 2010. And anecdotally, if you follow me on Twitter, you know this because I was tweeting about it last week and tweeting pictures, and a lot of us were tweeting back and forth about it, but I actually went to a gun range for the first time in California over my break, and it was packed. it looks to me like a bull market in guns and ammo from my very limited experience. Now, also, a lot of viewers have been asking about when the James Turk web exclusive, which we teased, would be up online. It is up now. It's at youtube.com/capital account. In it are his price predictions for gold, so you definitely are going to want to pay attention to that. He says some really interesting stuff. And after yesterday's show, maybe 1998 A West didn't see those pictures I tweeted last week of me with guns blazing, but he wrote this: Lauren, you came out swinging this time. Another great show. You guys are awesome. Is there a way to pressure satellite to feature RT without paying $25 a month? The rest of the country desperately needs to know this information. Well, we appreciate you for thinking that. I don't know about the satellite, but you can always watch online for free. At the library has free internet, youtube.com/capital account. And sticking with the viewer love fest and those getting their info here on Capital Account, Philip CEO emailed me to say that he studied history and law and never took a class in economics while in college, but I think your show has provided me with more useful information on this subject than a college course. Keep up the good work. Smart guy says he went to Cal. Thank you so much. We will, of course, do our best to keep it up. And David Fowl also emailed me to say that your work on economics is important. I watch Bloomberg too, but you offer better explanations and offer a non-establishment perspective. I'm glad you appreciate it because that is the point. You're not going to see the establishment perspective here, that is for sure. And about our interview with Ed Harrison of Credit Write-Downs, that was yesterday. A YouTube viewer, Mr. Zach888, said, I think things will play out exactly opposite of his predictions. I'm assuming he's talking about Edward. I foresee dollar index over 100. Long the dollar may be the biggest trade this decade. I just want to point out, go back and listen to the interview with Edward, because Edward told me, in fact, similar to what you're saying, to start planning my vacation to the Amalfi Coast next summer because of the euro and the dollar strengthening against it. And Optical Density wrote to me on Twitter about our interview with Professor Steve Keen, where we discussed occupying economics department. Happened a while ago, but we re-aired the interview last week when we were on vacation. He caught it then. We're so glad. And he said, fabulous interview with Steve Keen. And here's the Occupy Economics you suggested. And he shared a really great video to show some of the action that's been going on from a group trying to change the economics profession. Here's a bit of that video.
We're going through a period of economic crisis that's kind of illustrated a lot of the shortcomings of conventional approaches.
It's pretty clear to everybody that economics did not, as an institution, give sufficient warning and certainly did not inform the decision-making that took place prior.
Thank you so much for sharing that video with us and for telling us something we didn't know about what's going on in the Occupy Economics movement. And that is it for your feedback. That's also it for our show. Thank you so much for watching. Feel free to follow me on Twitter at Lauren Lister and give us feedback on the show at youtube.com/capital account. Go watch that James Turk interview. I'm Lauren Lister, and from everyone here at Capital Account, have a great weekend. We will see you here on Monday with some exciting new guests in store next week. We'll also have our Capital Account trifecta to talk about some of the fun things you love so much at the end of the show. Have a great night.